Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again in the gold market. So as usual, we have prepared the weekly report, and this time in our weekly report we have dedicated more space to technical analysis. So if you remember last week, I was concerned about the Elliott wave shape of the current price action, and what's really worrying me is that, well, gold could stay in the fifth last week wave to the upside in the long-term cycle that started in the 1950s. Well, if this is really true, in this case, in the longer-term perspective, we could get really very significant drop in the gold market. And I have asked our forum member, our friend Stag. He's really good in the Elliott wave analysis. He's real professional on this. And those forumers, or those our members who stand with us for, well, a long time should remember him. So sometime he posts really great analysis by the Elliott waves in our forum. And I just have asked him about what he think about the gold market right now, and I was most interested with the long-term perspective. And he was so kind and he's provided also analysis for the daily chart, for the weekly chart. And all the stuff I have put in our weekly report on the forum. So you could compare what we think from the Judd Napoli point of view, using the Napoli approach, also compare it to what Stag thinks, and as he using the Elliott wave analysis. And well, it's really interesting, and surprisingly, mostly we're agrees on the major points. So our approach and Elliott wave analysis agrees with the major points, with the levels and the overall price behavior that's suggested by Stag and what we see currently. So if you're really interested in that, you could just read this post in our forum. We start as usual from the daily time frame, and I simultaneously will point on some Stag moments that he provided in his analysis as well. If you remember last week, we said that around 19 even area we have strong support, daily oversold, daily confidence support, where potentially we could get the first bread and butter trade on the gold market. In general, overall situation that we see currently remains nested doll situation when we have the approximately similar potential trades on different time frames. So we start from the daily, but potentially if market will drop a bit more, somewhere to the 1825, 1830, or even to the 17 area, that could provide us another pattern of the same kind, but on a high time frames on the weekly. So in week gradually could start moving with this. For example, the first bread and butter will be completed with the pullback. Next would drop will give us the bread and butter on a weekly chart with the pullback to the minimum target. Next again, we could get another drop here with the greater some ABCD pattern, something of that sort. Because currently, with the nearest few weeks probably, we have approximately the same view as the Stag provided the view that here market probably should, as he tells that this is impulse price of action after the some pullback, market really could continue down and hit the next support area. It's around 1825, 1836, but potentially also we consider the lower level around 17 even. So that's in the longer term perspective. With the very short on the daily, by the Elliott wave analysis, Stag suggests that it will be not theoretic upward action, but first market could retest these lows first before real pullback will start. And as we have the target around 1993, Stag tells that probably gold really could create the new top before the next deep retracement will start. So here's some minor differences exist with the overall view. So we both agree with the downward action, but the shape of this price action stands a bit different compared to the Judd Napoli view and Elliott wave analysis. Currently, it means, what does it mean? It means two things with our bread and butter trade. First of all, upward action and completion of the bread and butter trade could be not immediately, but with the return back to the lows first, and then upward continuation could follow. Hopefully, our trade is already protected by the break-even because market has passed significant distance since the point where we have taken the position. So, if you remember, we have entered around 1926. So we first called on this day for the taking position. Now, as market stands significantly higher, and if we will get the pullback here, so we will have to consider a second attempt for taking the long position. While we suggest second difference is that we suggest the minimum target of the bread and butter is around 1970 and 1990, but well, stack point, that could be new high. So there we will consider later when we will be in the trade. We will see how market behaves, and we'll decide whether it's we have to close the position right at the minimum target, or we could keep them for high target. But everything that we talked about on this trade in general is still valid, and next week we will start with this continuation with the trade that we have. On the fallout from chart, we have the same ABCD pattern. On Friday, we have considered this minor pullback because this is COP target, but potentially our target, minimal target of this bread and butter trade stands around 1993, 1994. As you can see, this perfectly agrees. The OP perfectly agrees with the major 618 resistance level. So that will be the area where our minimum target of this trade stands. Taking a look at this recent drop that we've got on Friday, despite that numbers were really not bad, still it doesn't have the feature of the drop. So this is mostly looks like the retracement. It's very gradual and slow. Market is creeping with this trend line support, and that is really a positive sign for the bullish continuation. So whether we will get returned back to lows or not, we will see. But if we will not, in this case, we just should continue right back up to the OP target. That's what we will consider in the beginning of the next week. In general, overall price behavior looks really nice. So it doesn't bring any signs of this drop and some acceleration to the downside. It's very slow and gradual. So that's our view on the go. First, we consider and leading to an end our trade as we have started last week. And then, following our common analysis and using the Elliott waves and the Jordan-Apple approach, we will be focused on another leg down. That's our current view in the perspective of the 1-2 weeks probably.